Happy Friday, everybody. Welcome back to Swan Signal Live. We've got a treat today. Our very own Cory Klippsten, founder and CEO of Swan, is with us. Go to swan.com/SSL to get started stacking sats. We provide concierge services to help you build a plan for generational wealth with Bitcoin. So check us out at swan.com/SSL. Let's dive into this one. Cory, the first podcast we did together was almost exactly 6 years ago. It was like late November 2019. Here it is on the old Citizen Bitcoin podcast feed.
Good times. Good times.
That was a good time.
That's exactly 6 years ago. It's the 5th.
November 5th. So 6 years in a month.
6 years in a month.
Yeah. But I had to bring this up. It's been a while. This was when Swan was, before Swan had all come together. This was the Give Bitcoin era of Swan. And I joined the Swan Slack soon after this interview, which was awesome. That's how we really got to know each other. It's our first in-depth conversation. So that was great.
What a great week for reminiscing, because I also got to pick up Quiddim, Brandon, on the way down to Swan Salon for the Orange County holiday party and drive back with him. And we were just talking about all this stuff as well. So it was a fun week for this.
Yeah, it's been quite a ride. Okay.
Well, 10x, Brady. I just looked up the price on November 5th, 2019. It was about 9K.
There you go. It was a good time to start stacking. Okay, let's get into, we got a ton of stuff to talk about today, guys. It was actually a really busy week for Bitcoin. And we'll just start as we usually do with market stuff and talking about how the Bitcoin industry has developed at the high level, the big leagues, financial industry. But let's start with the liquidity environment. And this is a post here from BitPain talking about how this bull market has been has occurred through a vastly different liquidity environment than the previous bull market, which was during the COVID era quantitative easing environments. Now we are in the quantitative tightening environments where we've been, and we're starting to flip back to a QE environment. So this is an interesting, perspective on Bitcoin price, because we've grinded up, the past, since 2023, mid 2022, in this QT environment, where Bitcoin in the previous QT environment was in a bear market. And you can see that at the left side of the chart there. So I'll pass it over to you, John. What do you think about the how important is this?
Yeah, for me, I think this just reiterates the theme that we've definitely hit on, but it's worth hitting on it again, which is the people who think that we're at an analogous point, December 2025, to what happened in December 2021, which was obviously a peak, and then some very tough months and years ahead for Bitcoin. Just the backdrop from a macro perspective, and you can look at it in terms of interest rates, Fed interest rate policy, inflation. I think I said interest rates twice there. I meant to say inflation one of those times. Central bank balance sheets, money supply, the direction of federal spending, the crypto collapses and the contagion, Bitcoin's valuation from pick your valuation metric. I like the market value, realized value, the fact that ETFs didn't exist, on and on and on. Everything now is just completely different in the positive direction, in my view, for Bitcoin compared to November, December of 2021. And BitPain is highlighting more of the macro factor, like what is the Fed doing? And that's one of the things that's more beneficial for Bitcoin now compared to 4 years ago. But it's really like a long list of a dozen things. And I know most people hear that and say okay, then why the disconnect on the price? And we can get into why that is. But I think it's just pretty objectively true that the backdrop for Bitcoin now is night and day compared to what it was in the fourth quarter of 2021.
Yeah, Cory, your thoughts on the liquidity environments?
I think there's still just a lot of uncertainty out there. I think there are people waiting to see what happens with, new Fed chair. A lot of people were hoping in an sort of backwards way that inflation prints would come in hot. They came in a little lower than some people were expecting, which makes it sort of less likely to lower interest rates. And so I think there's just still some kind of dis-ease about which way this thing will go. Everything's basically driven by CapEx from Mag 7 stocks and AI things. And everyone is just wondering, is this like a local bubble or is just like the little one? And if you get off the train, you miss the big one, you know, and it's just kind of, it's a really uncertain moment in time. You know, when I look at Bitcoin, I would just say, you know, we didn't have any kind of euphoria or blow off top. So the chances of some kind of big crash from here is just minuscule compared to what it was in previous cycles. So I think cycles are just dead by virtue of that. You know, and my base case is that we actually see a new all-time high in 2026, which has never happened before. You know, there was never a price in 2014 that was higher than the all-time high in 13, never a price in 18 higher than 17, never a price in 22 higher than 21. And I think there's more than a 50% chance that we bust through 125, 126 sometime in 2026. There's just, as John was just ripping through, like there's just so many positive things for Bitcoin right now, and quantitative tightening is over, and you know it's in the government's interest to spend heading into the elections, especially when the president is unpopular as ours is right now. You know, so we'll see what happens.
Here's another good chart to look at. You know, if you're feeling nervous about where we are with Bitcoin right now, 89,000 today, down from the 126 high. This is a post from John, and it's showing the lowest price each year for Bitcoin, which is interesting. If you compound the yearly lows, it's a 75% return for almost a decade now. Of course, everyone loves posting the all-time high charts when we're pumping, but I think this chart shows a maturity test for Bitcoin. Are the lows getting higher? And the rising lows mean you've got, you know, diminishing panic, real accumulation, institutions refusing to let it die. And this kind of plays into what I've been talking about a lot on the show, where I think we've entered an era where we don't see these, you know, barring any massive macro socio-political events, we don't see these 80% drawdowns anymore, massive like bear markets. I think the floor is more 30 or 40%. We're testing that right now. So we'll see if that holds true. But I think these the lowest prices each calendar year here will just continue to get higher, and we won't see, you know, these massive bear markets that lead to this 2022, 2023 bars on this chart.
And for the super deep inside Bitcoin people, if you see 2020, the 49.71, this looked at closing price. I put closing in quotes because Bitcoin is obviously a global digital commodity that trades all the time. But if just to make the data set easier to work with, you're not going to take every single tick on the chart. So you're going to take the closing price. People will remember in 2020, there was a period where I think Bitcoin like touched 4K. But that was an intraday number. So a closing price, the lowest was 4,900.
Oh, you East Coast people aren't up late like us folks on the West Coast. We hit 36 something overnight on BitMEX. If you were watching Asia,
there you go.
The kimchi trade.
Yeah, that was Arthur's playground. Had a lot of liquidity back in the day. Also notable for BlockFi's asset-backed loan operation breaking completely overnight, and they actually couldn't liquidate anybody, and the whole thing would have gone out of business if the price stayed down there. But they were fortunate to get a bounce, and then the next day, Pomp and Zach Prince came out and said, "We did you a favor. We decided not to liquidate you guys."
Isn't BlockFi the Zoom, like,
That's,
you know,
the FlooshFi, yeah.
the FlooshFi, yeah.
Yeah, I think it's called Burr now. I think it's BRR, I believe, is the ticker.
Appropriate. Well, we've seen a lot of development this week and some comments from Saylor and Larry Fink on institutional developments this week. We'll take a look first at this tweet from the Swan accounts. Sovereign funds are buying every correction. And Larry Fink mentions this. We'll take a look at a clip from Larry talking about sovereign funds buying. Banks are sprinting toward Bitcoin services. The world is realizing the Bitcoin is built for the AI era. This is a great, we put these out just about every day on the Swan handle, these great in-depth threads about these subjects. So if you're not subscribed to the Swan handle, you should do that now and get these really high signal threads every day on the account. Let's take a look quickly at Fink, as I mentioned here.
We're seeing more and more legitimate long-only investors investing in it. There was an article about a foundation, endowment just bought a lot of IBIT. But I can tell you there are a number of sovereign funds that are standing by. They're adding incrementally at 120, at 100. I know they bought more in the 80s. Right. That's fine. And they're establishing a longer position. And you own it over years. This is not a trade. You own it for a purpose.
And then Saylor on a similar subject.
I mean, for all the banks in the world to embrace crypto, to embrace Bitcoin in 4 to 8 years would be fast. What you see here is it's happening much faster. What we've seen is BNY Mellon, PNC Bank, Citibank, JP Morgan, Wells Fargo, Bank of America, Vanguard, all of these have flipped from a hostile, negative, or skeptical view to a positive view in the last 12 months, right? We have announcements. Schwab is going to custody Bitcoin and extend credit against crypto assets early next year. Citi is doing the same thing. It used to be, I couldn't get a loan against Bitcoin from any major bank. And now, if I counted the top 10 banks in the United States, 8 of them are actually engaged in crypto lending, and they've all flipped their stance in the last 6 months.
All right. Saylor talked about a couple of developments on the Bank of America front and Vanguard this week. Bank of America announced that it will allow its wealth advisors to recommend a 1 to 4% allocation to crypto assets starting in January. And this announcement follows Vanguard's, which is basically they opened up, they ended the ban on allowing their clients to buy into the Bitcoin ETFs, and had a big bump the day that that ban, for lack of a better word, was lifted. So we've got a lot of development here this week. Saylor and Fink both pitching that institutions are increasing their exposure and embracing of Bitcoin at a faster rate than we may have even expected a few years ago. So yeah, I'll throw it over to you guys. What do you guys make of this trend? I mean, is this happening faster than you thought, Cory?
No, I mean, I thought institutions were coming back in 21, 22 because they said they were. It just evidently takes 3 or 4 years for them to actually do it. Yeah. Of everything you just showed us, I mean, really the most stunning one was just what a great solid pitch Uncle Larry just gave, Larry Fink from BlackRock on stage at DealBook. That is the right way to think about Bitcoin. It's something you buy and hold for, at least the midterm, ideally the long term. We always try to encourage people not to buy any Bitcoin that they think they're going to have to sell within the next 5 years. And I think, I guide my friends and family toward at least 10. And either way, by the time you've held it for 5 years or 10 years, you ain't selling for the most part. So it's a good way to get them over the hump and get them thinking the right way. So I think that's really interesting. I don't know how Saylor got to 8 out of 10 banks doing, digital asset lending. That's definitely not true. Maybe he's talking about their wealth management arm letting you take a portfolio loan if your portfolio includes some IBIT or some MSTR. Maybe that's possibly true, but that seems rather ambitious. I'll wait for John to chime in with a couple. I've got a couple more from what you showed us, but
I took that to mean that, and maybe this just happens kind of on a one-off basis or case-by-case basis, that he himself and that MSTR couldn't get a loan against Bitcoin, but maybe I'm wrong about that.
I think might be able to get it just as a corporate entity, but not against their Bitcoin. That's not an offering that 8 out of 10 large US banks have, that's for sure.
Fair enough. John?
Yeah, where my head goes on all this stuff is, this is adoption from like as serious of entities and platforms as, obviously there's still going to be way more people and entities to adopt, but just like the caliber of the entities and the platforms that are embracing Bitcoin it's like as high quality as it gets, whether it's Harvard, B of A, Merrill Lynch, Larry Fink, sovereign wealth funds, and Vanguard. And a little Bitcoin history for you guys. So I'm not going to make you guess the date. I wouldn't expect you to remember the date. Tesla, when they publicly announced in 2021 that they bought Bitcoin, so it was February 8th, 2021. Do you guys want to guess what the price did roughly one day in percentage return on the back of that announcement?
15.
It was good guess. Yeah, depending on which tick you pick is like, something between 13 and 17%.
Yeah,
so,
I
nailed it.
I remember it.
Yep. So I think maybe we're anchored to that, maybe incorrectly, or at least we just expect it to be that kind of quick of a reaction. That was in the middle of like a already pretty raging bull market for Bitcoin. It was a smaller market, so I guess it was easier for an announcement to move the price. Like we could rationalize it. But it does seem crazy to me that, like I said, Vanguard, Harvard, B of A, Merrill Lynch, and Middle Eastern sovereign wealth funds are all embracing Bitcoin for the long term, right? This is different than in 2018. I can still remember late 2017, early 2018. I'm at Goldman at the time, and shops like Goldman were announcing, oh, we're going to do something with crypto. They had no idea what they were going to do with crypto. They just saw the price going up. It was in the news, and they're just like, we're going to open up a crypto team. Like that's what they were saying. But that meant absolutely nothing. And then when the price tanked, they went on to do absolutely nothing with crypto. This is different. Like Harvard owning $500 million worth of a Bitcoin ETF is a long-term bet on Bitcoin. So I think zoom out is warranted here. I think when we look back a few months or quarters from now, we're going to say, okay, what was the signal of the fourth quarter of 2025? It was all those entities announcing that they're embracing Bitcoin. And it's just going to become way less important that the short-term price action, happened to be a 20 to 30% drop, depending where you measure it from. So yeah, I think this is all massive news in the long arc of Bitcoin's history.
One I forgot to click on here is CFTC has approved federally regulated spot Bitcoin trading as of December 4th. And these are what's called designated contract markets where commodities like gold are traded. So it's not talking about exchanges or a service like Swan where you can buy Bitcoin. These are, the big, service federally regulated exchanges that trade all the big commodities, right? So it's a shift that provides institutions like pension funds and endowments with compliant pathways, to allocate to Bitcoin. So I think this could be a huge deal. Again, we have a great video and thread on the Swan handle about this that Adam Livingston has put together, and you can check that out, the whole thread in the video. But John, what do you think about this? How important is it?
Yeah, so I'll admit I haven't looked into this one enough yet. I have a few things bookmarked on this one that I want to look into.
It's fresh. This just dropped yesterday. So
yeah, it's fresh, and I'll admit I didn't have a reason in my prior career to be very well versed in what exactly a CFTC registered exchange is and what kind of volume goes through them versus other avenues. So for me, for now, without having a ton of detail on it, I just put it in the category of it's becoming more legitimate, more part of the system, which I'm not trying to launch us into the debate, but it does, the whole thing of like the cypherpunk early ethos. Some people don't like this, but then it's also, hey, this is the path to Bitcoin becoming a widely adopted monetary asset, whether you like it or not. So I think this is part of that path.
I'll chime in and just say, anytime you see a big expansion in access for buying and selling Bitcoin, absent everything else held constant, it means that it's more likely that Bitcoin goes up and it's more likely that volatility goes down. And so every time you see new trading venues open up and new access to, Vanguard, Schwab, all these commodities, exchanges and desks and OTC markets and all of this being able to access Bitcoin, that's what you should think. There's more liquidity, volatility comes down over time, number goes up over time. So it's just, it's a smoother path over time less opportunities for like a 10x gain in 18 months or something like that, but more and more just looking like a steady savings technology that you can trust.
Yeah, exactly. And this is part of why, I think that we're not going to see these massive drops anymore. Those were really driven by retail and speculators, deciding, hey, I'm freaking out basically about what's happening with price action. Don't have a long-term thesis. They haven't done the work to develop that conviction. But, everything we're talking about here is access to, professional traders and money managers, right? And they will have a thesis and they will do the work to develop conviction, or they won't invest in it. And so when these, events happen where price goes down 30%, that's an opportunity to buy and start stacking. And so this is, like Cory was saying, this is the maturation of the market. And, to John's point, I think I'm hearing fewer people really with this disdain against institutional adoption these days. Maybe they've all gone to Nostr or something, but I think my thought is always like, how could you ever, expect Bitcoin to become a global reserve currency without integrating into the financial system? So I think that that's just sort of a red herring and not a very well thought through argument, but it's like the Trojan horse thing. You've got to get into the system if you really want to change it, I think.
Brady, can I hijack the agenda for the next topic?
You just, do what you want.
Right. I want to talk about scambling.
Yeah.
And I want to talk about prediction markets.
Yeah.
And I want to talk about the confluence of all of that with crypto and insider trading everywhere, and a desire. It's getting to be easier and easier to show the bifurcation between Bitcoin and crypto, which obviously we were doing a good job of, I think, for a number of years. And I think the DATs and treasury companies kind of complicated that story a little bit over the summer. But like, crypto is about finance and Bitcoin is about money. And they're very, very different things. And so when you hear somebody talking about Bitcoin and they say something about the future of finance, it's like, oh, you don't understand Bitcoin at all. You really don't get it. Like, the whole point is the opposite of that. And I hijacked something that I think, John, you surfaced it yesterday, but I think it was like a Mads Mikkelsen hero's journey meme or something. I can't even remember what it was, but it was, just making that point that you can just, stack sats and be peaceful. And, it's always like, focus on your craft, but it's what we always say, right? Like, all you really have to do now is, make more than you spend and put the excess into Bitcoin and live your life and enjoy your kids and have some fun, and you good. You don't have to be a hedge fund manager to stay ahead of inflation and, try to out trade everybody and all that kind of stuff. So I just think there's this, I can't believe how stark and clear it is now when you also rope into, they're trying to tokenize all stocks so that they can trade on unregulated offshore exchanges too. And so that they can have flash crashes and, liquidity bubbles and all this kind of stuff. And, overnight in Asia on a weekend and crash a Mag 7 stock, things like that. And then you have this desire to financialize literally everything that exists through prediction markets so that we can all gamble on everything all the time. And you have people aspiring to the future of, Gen Alpha. They won't actually have jobs. All they'll do is just become really good bettors, and that's what they'll do. They'll just trade instead. And so it's just this horrifying, dark version of the future where essentially they want finance and betting and scambling, the portmanteau of scamming and gambling, which we can get into right after this, to rise from something like 20% of GDP, which is where it is in the US right now. And they want that to be like 35 or 40% of GDP. It's non-productive, it's extractive, it's negative sum by definition. There is a place for capital allocation, and that's where, people with my training and John's career should be doing things. And that should be like, 3 to 5% of the economy is allocating capital. And that's what finance ought to be in a healthy society. And we're moving in the exact opposite direction of what is good and healthy for humans. So it's really interesting. Like, literally, Bitcoin is this direction, and the other one is a really dark and gross dystopian path that people are just charging down as fast as possible.
I was actually ready to tee you up for this, Cory. Here's the founder of Kalshi, which is a betting market like Poly Market, was on some podcast or conference talking about the long-term goal for him is to financialize everything, basically making everything, a betting market in a sense. And they want to put everything onto their platform, which of course they want to. But like Cory said, this creates an environment where, and actually I would say is the result of an environment of fiat money where you're really forced to gamble with your money. Otherwise it's, gone very quickly over a few years or a decade. Yeah. Go ahead.
Yeah, no, I'm gonna pick on that one just for a sec.
Yeah,
because I think it's related, but it's not it's not as tied as the way you just formulated it, because I think it's actually the people that have basically given up that are gambling, which is, that's why gambling has always been much more of a lower class thing. That's who plays the numbers, and does the pull tabs and all that stuff at the bar. Like, that's the ones who rush to the bar and drink away their paycheck on Fridays and don't take care of their family, and they don't save because they just don't see a way out. Like, having $10 excess from your paycheck just isn't going to get you out of it. And so, gambling is classically the opiate of the masses, and gambling exploded at the end of the Roman Empire. And that was the real sport in Circus Maximus was the gambling on the chariot teams and the gladiators and everything. And, but again, it's always negative sum for the participants because the house takes a rake.
Yeah.
And there's no chance of a win-win situation when you think about prediction markets, which are gambling for almost all participants. So yeah, it's just ugly. And this is, something we've noted for a long time is that, crypto ads and gambling ads have the exact same audiences. They have the exact same media buy. So prediction markets, crypto casinos, sports gambling, three-headed chimera monster trying to eat all of the excess cash of everyone that is basically just plugged into this weird matrix where that's supposedly looked down as like a, if not a healthy activity, like at least normalized. And it's not normal, and it's not a good way to spend your time. But I think this is a little bit more of a moral argument and a social argument than saying, hey, there's nothing else that they could do. Because it is a little different than just like buying and holding stocks, which you probably could do. It's nihilist, basically. It's giving up.
Yep.
And it's just using your money for entertainment and a rush more than anything else.
Yeah, I definitely agree that there's that segment. I think, like when you're saying that people are kind of go into this because they can't find a way out, they can't find an exit. I think there's a set of people who just really love to do this, and many get addicted to it because there is some adrenaline rush to winning. But I think a lot of people just they don't have access to buying stocks. There's the majority of Americans don't have access to or any exposure to the stock market. They're living paycheck to paycheck. That money is going less and less far every year. And so they're looking for a way out, and this, might be a way out. It makes it gambling even more accessible. And maybe you don't know anything about sports, but you can find something to predict that you might think about, right? On one of these markets. So, I think it's similar. I think it is a moral thing, and I think it's the fiat regime that really pushes these lower, wealth classes down. Because they're at the bottom of that, interest rate pyramid. They're in the payday loan level and in the credit card level where they're paying 20, 30%, trying to survive. And there's no way out in that world,
So on this topic, where my mind goes is the fix the money, fix the world tagline. And I don't want to come across as trashing it, because I think it is a great tagline for marketing purposes. You need something memeable that gets through to people in a punchy, quick way. So I think it's great for that. But someone listening to this discussion might be like, hey, what about fix the money, fix the world? You guys are telling me that there's all this nihilism and people are, gambling on the weather. Literally, that was an announcement one of these platforms, you can gamble on the weather. How I kind of rationalize it is maybe the more accurate tagline is fix your money, fix your world, but it's not as simple as we have Bitcoin now, so nobody's going to be a degenerate gambler. Like, unfortunately, it seems like we're going to maximum degenerate gambling in the next few years and decades, and that's going to take a long time to play out before we see any sort of like sound money type of system take hold.
So look, so Brady, you and I both messed around with crypto and tried to be crypto traders briefly before understanding Bitcoin, right? And that was a really common story. So in a positive spin on this, if gambling is everywhere, between the sports gambling continues to expand and crypto casinos everywhere, meme coin explosion, blah, 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 and now prediction markets exploding. So everybody's gambling in these 3 different ways all the time. Those are the people that are going to burn out. Now you have like 3 tops of funnel instead of, 1. And so I think it's actually really a really wide, broad top of funnel market to go into with a Bitcoin message and hey, do you ever think you'll have a family and give a shit about your future? Do you want something more in life than this degeneracy? Maybe you can actually take the orange pill and escape from your pod where they're just milking you all the time for your body heat. And Bitcoin is the way out. So, in that respect, maybe it just cycles people through the, what used to be the shitcoin horseshoe, but it's basically the gambling horseshoe. And it's a lot more people going through it a lot faster. And we end up with a lot more Bitcoiners than we otherwise would because of all these degenerates at Coinbase and Kalshi and Polymarket, et cetera.
Yeah, it's hard. It's a hard sell to say, hey, this is not a get rich quick scheme. You're going to have to work, save your money, even a little bit at a time, buy a Bitcoin and hold it for 2 decades, right? That's a hard sell. When you're in a world where you can bet on anything, right? And get, the potential, the promise of some kind of return right away on anything. And again, like, it opens up, these betting markets open up the opportunity to bet on just about anything. So if you don't know sports and you're like, I don't know that world, I don't trust myself, I don't have the knowledge to outcompete all those people who, professionally study sports, you'll find anything that you can bet on. Anything in your community, you can bet on, like, what is the school board going to pass, something like that. You could, anything. I mean, so that just opens it up, like Cory was saying, to everyone. And I kind of like that idea where you get, you kind of push people just through that experience. And Cory and I both went through it. And, I got burned in 2017 and finally figured out that Bitcoin was the thing and then committed to it. Where maybe that'll burn people out faster and it'll accelerate the move toward this understanding that, okay, the Bitcoin is the thing. And I just got to, figure it out, commit to it. And there's no easy way out.
If you want, we do have some more validation of that beyond, you two guys. Think about how many great clients we have that came from Celsius, BlockFi, Terra Luna, etc. So there's real evidence of it.
Yeah, absolutely. Cory spent that whole year calling out those 3 scams and others. And I mean, your DMs are probably still, getting comments in from people who have learned their lessons from those mistakes and from the things that you and other Bitcoiners were talking about during those years. So
literally every Swan Salon I attend, somebody comes up to me that I haven't met before that says they got out of one of those CFI scams back in 22 because of us.
Yep. It is pretty amazing.
Hey, quick side note, by the way, I don't think people realize that if you're watching this, you can pop into the chat and you can actually comment live and ask us a question. So it's something that you can take advantage of when you happen to be tuning in live. You can actually get into the show by asking us a question in the chat. I keep the window open.
Yeah, absolutely. Put questions in there. And we have, many times pulled questions from the chat and brought them into the show. And absolutely, we'll take the great questions from the chat. I'll just throw this out there real quick while we're maybe wrapping this up. Not to necessarily force us off of it, but let me see. I'm gonna flip this. This is Cory's post on the Swan blog. So you can go to swan.com, click on the research tab, or just Google Cory scambling and you'll find it. And yeah, you can get into, his original thinking earlier this year, laying out the thoughts that we've been discussing. So check that out.
Yeah, that was I think I published the word definition on election day last year, and then put the post out on inauguration day.
That's right.
And you could just tell that it was coming, and there were some really positive things about the red wave or the orange wave, because I think there were some excesses, obviously, of the previous administration. And I think, having people talking positively about Bitcoin, even if they were also, wide open and, sort of hanging up price signs for crypto scammers and pardons of horrible people and things like that. Regardless, it's very clear that a lot of the institutional adoption of Bitcoin has happened in the wake of what happened last November. It's just, there's two sides of the coin, and that's probably the wrong analogy. Anyway, there's just, there's two sides to everything. There's a yin and a yang, and a lot of bad things came with this as well. And I think there will be a massive backlash against crypto and crypto scams whenever this administration's power, starts to wane enough that they're assailable. And unfortunately, because so many have tried to wrap Bitcoin back under the crypto umbrella in this time, I think that we'll probably face some headwinds from regulatory and just kind of like socio-cultural backlash against crypto. Will make things hard for Bitcoin again at some point. But I think it's okay. And the one thing that I just want to give real credit to someone, an unsung hero here, who is responsible for, in this push, starting from the very first Trump speech in May of 2024, when he kind of came out pro Bitcoin and pro crypto. If you'll notice, he did separate them. It was Bitcoin and crypto. And he cribbed that from RFK2, who had made that his own platform. He had said Bitcoin and crypto back then. And, we were kind of like upset that it wasn't just Bitcoin, but he did at least separate them. And the guy who was responsible for separating Bitcoin from crypto in political discourse, and now kind of everywhere, was Brian Estes, our friend from Off the Chain Capital, who used to supply the Pacific Bitcoin jet at PB in 22 and 23. So thank you, Brian. Some of us know what you did, and we appreciate it. And I think that was a masterstroke to, you seemingly throw the crypto people a bone, but actually separate it from Bitcoin forever. And it was well done. A lot of foresight there. So thanks, Brian.
Yeah, unsung hero for sure. He kind of stays behind the scenes a little bit, but does amazing work. Really cool guy.
He's the producer of God Bless Bitcoin, which you can go watch on the Swan YouTube channel right now. It's got about 1.5 million views on our channel and probably another 2 or 3 on their website. Yeah,
it's great. All right. Anything else on this topic, guys? I think that was a good exploration of the scambling idea. Okay. Let's talk about Bitcoin and energy for a little bit. We've had a couple of tech titans weigh in on this idea, Elon Musk earlier this week. And following that appearance on that podcast by Elon, this clip from Jensen Huang, the CEO of NVIDIA, started circulating again as well. This was from last year.
A lot of power producers, energy producers, the excess energy, they allocate that to Bitcoin mining because there's a very clear market there, kind of one-to-one financial market there. Do you see something like that possible in terms of like a smart grid, or like having those companies be able to dedicate some of that excess energy to training models and providing that power to?
You just gave a current example of excess energy being used to convert to store that energy. Essentially what Bitcoin is doing is taking excess energy, storing it into a new form. Mm-hmm. It's called currency. And you take that currency and you take it wherever you like. And so you took energy from one place and now you've transported it everywhere.
All right. Then Elon earlier.
There are still some fundamental currencies, if you will, that are physics-based. So energy is the true currency. This is why I said Bitcoin is based on energy. You can't legislate energy. You can't just, pass a law and suddenly have a lot of energy. It's very difficult to generate energy, or especially to harness energy in a useful way to do useful work. So I think that probably we won't have money, and probably we'll just have energy, power generation as the de facto currency.
Okay, so this is an important topic, and I'm really glad to see some, business leaders realizing how important the energy component is for Bitcoin. So Bitcoin uses energy. It's a digital money, right? And it takes these natural laws of nature, thermodynamics, and ports them over to the digital realm where everything is copyable instantly, where everything is accelerating, and it creates this scarcity, as we know, and also this tempo that is, fixed. It's every roughly 10 minutes, the blocks come out. And that is an innovation of Satoshi's that I think is less understood and less important, or less understood how important that is. Because you can't do that in the digital realm. Everything just accelerates. As mining accelerates, the speed of the blocks would accelerate as well. The difficulty adjustment, creating this sort of harness on the acceleration in the digital space gives us this sort of anchor, this natural anchor in cyberspace. And I don't think we've seen all of the use cases of that application of Bitcoin. Besides just money, and we know it as money now, but I think there will be other use cases as we continue into a future of machine acceleration. And that's all because Bitcoin is using energy to do this, to operate. And right now, the energy usage, I think the last time I looked it up, it was the Cambridge study from last year, was at 58% renewable or excess energy being used. And so as Bitcoin's energy usage goes up, it's finding ways to sort of take the energy that's not being used at the edges where the grid is not demanding it, and using it to secure the network and create this, scarcity and consistent tempo in cyberspace. Those are my thoughts on Bitcoin energy right now. You guys have any takes on the importance of energy or Bitcoin's energy usage or anything on this topic?
I think it's a little bit of a coup to get Elon talking about it accurately again. He has before, but I thought that was really nice and crystal, and he didn't try to pump a joke coin or something like that for once. So, let's take the little victories with that guy.
True.
I will just, shout out Daniel Batten. It seems like anytime some mainstream source puts out some kind of, bad math attempted takedown of Bitcoin's energy usage or whatever, he's just still right on it. Guy's been carrying the bag for like 3-4 years now. The number one anti dumb energy takes about Bitcoin guy on the planet.
Yeah. And he came into Bitcoin right after a relatively long stint with Greenpeace, which is interesting. And infamously created the skull of Satoshi. So I like that. I like the fact that he came from Greenpeace into Bitcoin because he saw that Bitcoin is actually, positive for the way we use energy in this world.
That does make his story even better. Do we have the Michael Burry clip or even a screenshot of what he said this week, Brady? If we don't, it's fine. I could just describe it.
Yeah, go for it. Yeah, I don't have it.
Okay. He basically just called Bitcoin tulips. He's like, it's crazy. There's sane people on TV talking positively about Bitcoin. It's nothing. It's tulips. Like, he didn't really have like a very compelling argument. That was the extent of what he said. And Michael Burry is the guy who is featured in The Big Short. He did have a very well-timed call on the collapse of the housing market and subprime and everything related to that. in the 08, 09, 07, 08, 09 GFC. But he actually has not done a good job investing capital after that. And he's just kind of throwing years and years old FUD at Bitcoin. And it surfaced this week. He had a conversation with someone. So I just wanted to highlight that to contrast that with what we heard from Jensen Huang and Elon Musk. I think obviously I believe Elon and Jensen were much more articulate and accurate in what they had to say. And then I'll just add also, we probably all had our at least a few Thanksgiving family conversations where someone said something about Bitcoin to us. And I had one with a family member who admittedly, like, all he knows is he's very successful in his career. He's probably 10, 15 years older than me, a cousin. And he just sees Bitcoin in the headlines and he knows that I do something with Bitcoin. That's all he knows. But we got talking about Bitcoin and mining and about how Bitcoin mining can use energy independently of the time that the energy is produced and independently of the location where the energy is produced. And you could definitely just see the wheels turning in his head. He was like, oh, that's pretty cool. And we talked through it, because it's like, if you want to use the sun shining in some remote location, you have to build a city to like really use it. You're not going to, put solar panels there and then try to have the energy travel hundreds of miles. It's just not possible. So I do think this energy angle is something that will draw people in over time. It's not as sexy as NGU, obviously, right? But it's like one of the cards you can play to get people to start caring about Bitcoin. And most importantly, getting them to see that this is like a unique thing. Like, it's even more than digital gold, right? There's no analogy to gold. Like, gold mining, awful for the environment and for energy consumption. Bitcoin's the opposite.
Yeah, I visited a gold mine once, and it was apocalyptic. It was just insane chemicals used everywhere, and just digging out the earth. It was yeah, apocalyptic is the right word. We have a question we can pause and answer quickly. Can I move my BTC from my Ledger hardware wallet or signing device to my Swan accounts? And Crypto Acosta, if you're still there, yes, of course you can. And we will help you do that. Just hit us up, swan.com. Well, you have an account, so just hit up the client services team and they'll take care of you. All right. Let's do some quick hits here to wrap things up. We've got MicroStrategy creating a USD reserve to service their dividends, and they intend to strengthen this over time. I guess right now it's servicing or is big enough to handle 13, 14 months worth of dividends. They want to increase that to 24 months. They sold they sold a bunch of common stock in order to fund that account or that reserve. John, what do you think about this? I know you follow MicroStrategy relatively closely. Why did they make this move? What compelled them to do so? Was there some kind of outside force that compelled them to create this dollar reserve?
Yeah, and it's crazy that this was announced Monday. At first, I was like, wait, that was last week. But no, that was only a few days ago. Yep. I think the punchline here is that if you ask Saylor, I don't think he would have personally wanted to do this. Like, he probably thinks the strategy was sound without this $1.4 billion US dollar reserve. But you have to remember the game he's playing, which is courting institutional investors to invest in all these different Bitcoin securitized and adjusted instruments that he has created, whether it's the equity, the common equity, the convertible bonds that they still have a few outstanding, or the perpetual preferreds of these different flavors. So they have to respond to institutional investor feedback. And I think there was a narrative out there that people said, hey, we're not fully confident that in all market scenarios, you're going to have access to the ATM on the common and be able to pay the dividends for all these different instruments that you're issuing. There's debate about that, whether they would have access to the common or they had other avenues to raise cash. But the narrative, the concern was out there enough that clearly strategy thought, okay, let's raise this US dollar reserve and this should quell those concerns. So I think that's what they've done. I think it will play well for them in the long run because this makes the perpetual preferreds just that much more attractive with this big cash buffer there. And you see how hard they're marketing STRC stretch. They really want to draw capital into that. So I think they just looked at this and said, hey, this is a way that we can make stretch and the other instruments that much more attractive. So I think that was their goal.
Was there any regulatory pressure?
Not that I saw. That doesn't mean there might have been something I didn't see, or maybe something that was happening behind the scenes, but not that I'm aware of.
Yep. All right. Any comments on MicroStrategy, Cory?
No, I just read it the same way. It was just such an easy way to get rid of something that was taking up an inordinate amount of brain space for people discussing this, both in mainstream media and on social media. And it was pretty cheap to get rid of. And, I think you're right, John. It was really obvious that Saylor doesn't like it, so he made Fong go talk about it for a week. I'm not gonna talk about holding dollars. It's beneath me. Let my little homies ride on that one.
That's right.
So I thought that was pretty funny. But yeah, that's literally all it was. This wasn't an issue. It never was an issue. But at least you can get the conversation back focused on what's important, which is in their case, accumulating as much Bitcoin as possible and incrementing BTC per share.
Great. Okay. A report was issued from the Financial Services Committee. This is a tweet from Alex Thorne. 50-page report on Operation Choke Point 2.0, which was branded several years ago during this past, I guess, when was that, Cory? Choke Point 2.0. When was it branded? When did people start talking about this?
I think
a few years ago.
Nick Carter branded it in like 2021 or 22, I think.
Yeah, okay, that makes sense. So the report identifies at least 30 entities that were debanked through informal guidance. The FDIC, OCC, and the Fed all use non-objection letters, pause letters, and formal guidance to prevent or pressure banks from touching crypto. The SEC enacted an enforce first, make rules never approach, and blocked bank custody with SAB 121. And regulators publicly denied discouraging crypto while privately pressuring banks to stop. So this report has come out. This is all done in the Biden administration. So this crypto-friendly administration is investigating all of those actions. Any takeaways on this, guys?
Look, there are good marketing lines and good marketing angles that typically contain a grain of truth, but the real truth is, almost no business is actually faced debanking. What that actually means is being shut out of the financial system completely. Having an account closed is not being debanked. That means a bank closed your account. You can go across the street and open an account somewhere else. So, just like what happened with Swan and my family, hilariously, right after I helped bring down Celsius and FTX, we got debanked and Swan got, but again, it's not being debanked. If you can close, Citi closes your account, you can go across the street and open an account with Chase or Wells Fargo. That's not being debanked. It's not coordinated. There's not some kind of like anti-crypto cabal, making this happen across the board. So, I think what actually happened, and it seems really obvious, is that instead of it being some kind of cruel coordinated thing, and I think obviously when you see that Wall Street is the one who would have coordinated that, and instead they turned around and went whole hog into crypto over the coming years, and we are where we are today. So it just kind of falls apart on its face. What did happen is that a lot of crypto people did a lot of insanely shady criminal shit. And of course, it started to get treated as a risk category like porn and weed and money laundering. And you started to see some banks take an approach that they didn't want to serve this category. But that's a very different thing from what is actually the proper definition of debanking. So no, Jack Mallers did not get debanked. That's bullshit. No, Eric Trump did not get debanked. That's bullshit. They got dropped. They got some accounts dropped by some banks, and that's going to happen sometimes when you're in risky categories. So I don't think there was an Operation Choke Point 2.0, and there's definitely not an Operation Choke Point 3.0. This is just marketing.
What do you make of, this is one that you've definitely looked into more than I have, Cory, so I kind of defer to you here, but what do you make of the fact that maybe some of the so this is different than like deep, whatever we're calling it, debanking or closing an individual. What do you think about the fact that from one administration to another, do you think that some institution, let's say it's a bank, being more willing to get into Bitcoin custody for their clients? Do you think there was like any of that type of change or reversal, or like institutions being more open to it? Or would you not even, ascribe causality in that either?
A lot of people that don't spend time in traditional markets at all and don't understand like the reason that we have such deep liquid capital markets in the United States is actually because of regulation and the rule of law. And if you take that away, then people will no longer trust this system in this venue, like this jurisdiction, with their capital. And it will go away if they don't have safety and guardrails and investor protections and disclosure requirements. So if this all basically gets tossed out, which is kind of the direction that it's headed, then it won't be an attractive venue for capital anymore. And it will basically just be a thieving free-for-all. And so that's the direction that it's kind of heading. Now, there are good things about the direction that we're heading, because it is nice to think about access to assets for people around the world. Like, it sucks to be in Mozambique or Romania or whatever and not be able to buy a fraction of an Apple share. So that's obviously going to be better. But there are going to be downsides if you do that the way that they're trying to currently get the legislation written. So my understanding is that Kraken and Coinbase are writing the new rules for how tokenized stocks are going to operate, and they're going to KYC at the on-ramp and the off-ramp, and then otherwise can trade freely on these centralized offshore unregulated exchanges and DEXs and all kinds of perp trading venues and prediction market tokenized stock blah 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 run out of Malta or whatever. Like, it's just gonna be this explosion of scambling, but with actual American companies that pensioners own. And there's going to be good and bad about that. Let's just be honest. There's going to be a lot of negative effects of that. There is going to be more access, and that's good. There's going to be more liquidity. That's good. There's going to be a tremendous unleashing of horrendous fraud to a degree that like you just can't even imagine. Not to mention that now, if you think about, these are going to be bearer assets, these tokenized things, if they're able to trade freely without it being tied to an identity. And I understand that's like what they want, but that also means that you now on your little device with your tokenized stock on, Solana or Tron or something like that, are going to have that able to be stolen from you. And so everybody at all times, not just, rich doxed crypto founders or whatever, is going to be a wrench attack candidate. Like, you probably should just turn around and, any nice neighborhood in any city around the world, or any backpacker camp or whatever, it'll probably be risk adjusted, wise for a bad person to try to wrench attack anybody they see. So that's the direction that we're headed.
And that's
update the system, they said.
Yeah, that brings us back to what we talked about before, which is the stark difference in visions. And I keep coming back to the whole fix the money, fix the world. I think that it's more of a personal message, or at the very least, it just takes a really long time to play out.
Yep.
All right. Great one, guys. Let's talk a minute about Swan, and then we will wrap things up, and everyone will have a fantastic weekend. Check out Swan at swan.com. We help you build generational wealth through investing in Bitcoin. And one of the things we really pride ourselves on at Swan is building strong relationships with our client, especially through Swan Private. We have Bitcoin reps at Swan Private, like John, who deliver these personalized services to help you navigate Bitcoin with confidence. You can head to the private section here and read all about our Swan Private service. Just click meet with us to schedule a meeting with John or one of the other guys on the Swan Private team. can also hook you up with a Bitcoin IRA. You can check out this page and go to this calculator, which is really fun to play with. You can set all your own assumptions here and see how adding Bitcoin to your IRA might really supercharge it. With these base assumptions here, you can see that over a period of time, 30 years, if you start investing in when you're 35 years old, have an account go from about $1.5 million to $3.3 million if you add a 20% Bitcoin allocation. But come here and play with all of your own assumptions till you're satisfied or comfortable with them, and then get in touch with us. We can roll over your IRA, your 401k, and other versions of retirement accounts into a Swan IRA. We also have Swan Vault, which is an advanced cold storage service. This is a multi-signature service where you have 3 keys. 2 of them you hold on hardware devices and you put them in geographically separate locations. The 3rd key you manage through your Swan account, and it takes 2 of those 3 keys for you to move your Bitcoin. You can go to this page on the Swan site and see how Swan Vault works. We have videos talking about each of these services on the site as well, so you can learn more about it. We would love to work with you to build your Bitcoin stack. John, Cory, would love to hear anything you have to say, a little anecdote maybe from you, John, about client experience that was positive for you, just to help give people an understanding of what Swan Private can do. And then Cory, any Swan pitch you want to give, would love to hear that to wrap things up.
Yeah. So just quickly, I'll say that even if we're not financial advisors in the literal sense of the word, a lot of our clients look at us as they would their traditional financial advisor, but for all things Bitcoin. So they want that Bitcoin knowledge, they want a human to talk to, and they want a platform, or the Swan platform, that's comprehensive, multiple products and services that they can take advantage of. So that's just summarizing what we deliver. But anecdote wise, there are times where I'll talk with the client, whoever's the head of the household, the person that's most interested in Bitcoin, but then they might get their family members on the call as well. Because even though everyone else is not going to be diehard Bitcoiner, at least yet, there's always going to be one person leading the charge, right? But that person may want the family members to be aware of how this all works and, where they have their assets and things like that. So those are oftentimes the most rewarding conversations, because you feel like you're just delivering a huge benefit to the whole family.
Cory, what's coming up for Swan?
Is it my turn?
Yeah,
Awesome.
yeah. Tell us, whatever you have on your mind.
I'm so excited just to be open in New York. A place that I lived for 7 years, a place where John lives and has lived for a long time. It's just great. It's the financial capital of the world. It's the number 1 GDP of any metropolis on the face of the planet. So to be back there and to be able to kind of give people in New York the Swan experience, the Swan Private experience, it's just been awesome. It's been great. So much of my own personal and professional network, probably half of it, is there. And I'm 6 years into this company at this point and haven't been able to let so many of my friends even experience using Swan. So it's just been a really fun month getting to ramp that up and, doing more events in New York. We've got another one coming up in mid-January. So I would say if you're in New York and you want a great partner on your Bitcoin investing journey, definitely check out Swan. And you can probably ask for John as your MD, since he's in the city. And I'll be out there again in January. I think mid-January, we've got another big Swan Private event out there. So sign up soon and come say hi. Awesome.
Thanks so much, Cory. It's great having you on the show. Have a great weekend, everyone. Remember to visit swan.com/SSL and join the Swan family. We would love to have you. We'll see you next week. Take care, everyone.